the government has turned so many knobs to keep this thing running that eventually they're going to forget what knobs they turned. And then what? Good morning, everybody. I have been thinking about something that is just as scary to me as a housing crash, and I wanted to talk about it. I've been walking around mumbling under my breath for a while now about this, and I don't think people quite grasp it. All the YouTubers, all the people in the media are calling for this housing crash. As a real estate agent, somebody that actually does deals, like especially here in Florida, I'm seeing like a desperate situation between both sides arguing with each other. And I'm looking at the numbers. I'm looking at the Case-Shiller report. As you can see behind me, I'll post it right here. The numbers aren't going down. Statistically, throughout the United States, we are still, even if not up, on what we have seen over the last couple of years. Inventory is still low. Demand is still quite there. We're getting a lot of people here on the Gulf Coast and in Florida from other places up north, out west, and it's filling the gap. So my question is, what if prices don't go down? Okay, everybody's wanting them to go down, but what if they don't? And if they don't go down, we are going to see an entire generation of people, of the younger generation, even people my age that have not bought. They will not be able to buy a house. They will not be able to afford the house that they feel like they've worked their entire life for. That gap, the wealth gap, will have completely just left them. I feel like the middle class is totally getting eroded out of our society right now, and it's scary. It's quite scary that there might not be a middle class. But statistically, the middle class has always been made up off of the equity that is in their house. And since so many people decided to wait out this housing boom because they didn't want to buy into an upwards market, they didn't own any property as the market went up. And if the market doesn't come down, and here's a big thing. What is everybody expecting it to do? Okay? Goldman Sachs, JP Morgan, all them, and I made videos on this endlessly last year. We might see 10 to 15% pullback in prices. Okay. 20%. 20% max. And if you look at the Case-Shiller report, we pretty much saw that 6 months ago. And now we're battling back. And are we expecting 50%? That doesn't make any sense. If we saw a 50% pullback in the housing market, people would be getting foreclosed on left and right. Some people would just let it get foreclosed on because what's the point of trying to pay that bubble down? Banks would collapse. Mortgage lenders would be out of business. Everything would just be a mess. Dogs and cats would be sleeping together. Let me add, construction workers, contractors, anything to do with the real estate world, which is a large portion of the economy. Home Depot, Lowe's, concrete manufacturers, shingle manufacturers, everything that touches a house or anything to do with the commercial real estate world would implode. There would be bread lines everywhere. There would be just problems throughout. Income tax would be hampered. CPAs would be running for the hills because of the amount of just craziness going on. Lawyers, real estate attorneys, title work, like across the board, real estate agents, it would just be massive unemployment. And right now there is not that much unemployment. We're actually looking at really good unemployment. Was it 3.8%? Call me when it gets to be 10 to 15%. If we see a recession, we're looking at millions of people unemployed. But we don't have those now. So you really got to factor this into your opinion here. And it just would not make any sense. Like that theory, politicians will never let it happen. They will print money before they let that happen. We saw 20% of all the cash ever created in the history of this country made in 2021 and 2020. To fill the gap for COVID, for the cough, to fill that liquidity problem. And we're just seeing, in my thought, things got more expensive. There was more money, things got more expensive. The government allowed interest rates to stay very low for too long, and this is the problem we have. 40%, I want you to think about this number. 40% of all the houses out there to be owned will be owned by institutional investors or companies by 2030. That is an actual headline. And if you think about it, those properties will most likely never come back on the market ever. They'll be held in portfolios, never to come back. What were these institutional investors doing? They were hedging themselves from inflation. Real estate has always been the hedge of inflation. Why do you think I own real estate? I own a house. I own rental properties. Okay? I bought one in the last 6 months because I believed like I needed a hedge against inflation. Let's think about it. Wars are paid for through inflation. There's a really great book out there called The Creature from Jekyll Island. If you want to read that, I'll try to link it down below. It kind of like gives you the idea of how these wars are paid for. And instead of war tax, we have inflation. It's the sleeping robber of our money. As it sits in our savings account, it's being eroded away by politicians to pay for all these little things out there they gotta pay for. So what do people do? They put their money in real estate. They try to do it in gold. I think the S&P 500 is a high tide waterline of inflation. But we can argue about that another day. But people own real estate. And I think that as these wars grow on, we're in a new one now, the Israeli conflict, you've got Ukraine, Russia, you've got Niger, you've got a lot of other things going on around the world. And we're paying for those bullets, beans, and Band-Aids, not through a war tax, but through inflation. And I think that houses are just going to continue to get more expensive. Let's say we go into a recession. So right now on the street, there's a 52% chance that we won't go into a recession. So let's think about that. It's 50-50, and all they got to do to really do any of this is just fix the numbers, as we've seen them do over and over and over again. If you really believe those inflation numbers, you ain't been to the grocery store. And as we get towards election season, I believe politicians, especially the left, is not going to allow us to go into elections with a down stock market and economy. It'll make it look like they've been doing something bad for the last 4 years. They will turn the money printer back on. They will reduce interest rates to the point where the economy comes alive. And when it does, real estate is going to boom here on the Gulf Coast, okay? It is going to go back into turbo mode. Why not? It's the thing to put your money in. It is something that that people time and time again have based their portfolios on, and there is going to be so much cash on the sidelines and so many buyers that have waited to buy that property is going to get taken out by the bundles. And that's why I think that a year from now, we will see prices higher. I think Zillow said the other day 4.9% is what they're expecting increase in prices next year. It's a pretty good return on just holding real estate. It's probably going to be higher than that. And like for me, I'll buy distressed properties. Email me down below if you have a distressed property you want to get rid of. You're going to see a lot of those deals come on the market. Investors are going to pick them up. They're going to put a roof on them, and they're going to put them in a portfolio, and they'll never come back. We've been seeing New York take away short-term rentals, Airbnbs. I made a video on that. Check that out. And I think we're going to see a lot of other cities, municipalities do the exact same thing. Why? Because they think that that pool of properties that are short-term rentals should be on the rental market, and that'll help people find a cheaper property rent, like a tenant find a place to live. Well, they don't understand when you rig the market like that. Entrepreneurs, investors, they find a way around it. They just won't play the game. They'll take their money somewhere else. There'll be a lot of broken, rundown houses all around town that nobody wants to touch, not given this is not going to allow any tenants to have any roofs over their heads. There's going to be less rentals out there. Whereas now, there is an incentive for people with money to buy these properties, fix them up, and provide housing for somebody. So it's going to be a really sticky situation. I don't think the government can step their foot in it. The tax code gives people incentives to provide housing, and that's something that, you know, it's going to be interesting. But I don't think you can flood the New York market with 40,000 properties all at once and expect that to be a good thing either. They'll get absorbed some other way. People will just turn apartments into storage facilities or something. They'll leave them vacant. They'll work around it. You can't do it that way. So what's really scary is I think we're going to have high interest rates for a while and high prices for a while, because the interest rate is supposed to be like strangling the economy. But they've created this environment by doing it too fast that people don't want to get rid of their interest rates that they locked in 2 years ago at 2.5% to buy another property at 6.5%, 7%. And if we go higher, I don't think we'll go higher, because there's something about the debt, the national debt. When you get up around 5.5%, 6% Fed funds rate, the government can't afford the interest, and they won't stay there very long. Let me tell you, they will kick the can of this national debt as far and as long as they possibly can and try to refinance it somehow. And that's the only way they can do it. And they can't afford the interest if you get it jacked up. So they're gonna make the interest rates go back down probably into next year. If they raise one more time, we won't see the effects of that for 6 more months. And I always say 1% interest rate rise is 10% of a property value down, but we did not think about how little volume there is out there. And then we've had a couple hurricanes and national disasters, which has gotten rid of a lot of housing that's out there. And then insurability right now is awful. Okay, try to insure a house that's old on the Gulf Coast. It's almost impossible. You got to be a cash owner or be able to make your own rules with the insurance company. I don't know how you can do that. You wind up having to put a roof on it, fix the electrical and the plumbing, and they still cancel you. It should be illegal. Redo the entire insurance market. It is just, it's mind-boggling that you can get a policy, have all the wind credits on it possible, all the wind mitigation, and then they send you a bill for $500 extra, a month later saying that they need this because they'll title it something weird about on your policy, and they'll say we need extra $500 because we don't like your wind mitigation credits. I'm like, well, you inspected it 3 times. And we gave you everything you wanted, and it's better than the other houses you insured. There's no rhyme or reason to a lot of it. They're going through a lot of lawsuits right now, and the governor, he needs to get off his butt in the state of Florida and fix something. Quit frolicking around there running for president and fix the state of Florida's insurance problem. But that's all I got to really say about this. Comment down below with your thoughts on what you think the housing market is going to do. And if you do, provide why you say that so we all know how you got to that point. We got student loans coming back that's got to be paid for. We got credit cards that are ready to implode. People have been living on those things for a long time. There's just a tidal wave of problems coming. Let's don't get started about car payments and people losing their cars. Maybe that's another video. That one is about to implode. And I think Europe will break before we do. And I think that the financial world is very fragile. I don't know if it's going to be in the real estate world that it happens. It's probably going to be more like credit cards, student loans, and car loans. But car loans will affect banks across the board. It's going to be a Wild West, everybody. It's going to be the Wild West. I know I've been saying that I don't think it'll break based upon what is out there right now, the line of scrimmage that we are coming up to as the quarterback. But I will say this. If it doesn't break, it's all fake. There is a theory out there, like it or not, that if you look at all the numbers, as we've been told in economics and MBA, business school, all this, you look at these numbers and it says it should crash and it doesn't crash, it's all fake. There's a theory that it's all fake. And the government has turned so many knobs to keep this thing running that eventually they're going to forget what knobs they turned. And then what? They got to either print money or it's all fake. I'm half joking with all this. I'm half joking. We're really going to see inflation and a stagnant economy for a while. But I think we'll run back out of it, and inflation's going to leave a lot of people in the dust. So prepare yourself for it. I'll see you guys in the next video. I had to get this off my mind.